I'm William Grantham with IchimokuWeather.com with this Ichimoku deep analysis of EMQQ, the Emerging Markets Internet and E-Commerce ETF. You can find more information on this ETF at their website at EMQQETF.com. Information would include what's going on with its country weightings and the top 10 holdings. It currently has 99 holdings, and you can see that as of January 1st, 2021, it had 62% plus of China stocks. This is the weekly chart of EMQQ, and we can see it did begin back here in 2014 on November 12th to be exact. Our cloud formation starts in 2016. The cloud formation on a weekly starts 78 weeks after the start of trading. How that is calculated is the cloud itself has the longest period of looking back 52 periods, taking the highest high and the lowest low and dividing by 2, and then that's projected forward 26 weeks. So 52 plus 26 is 78 periods. So on a weekly chart, that would be 78 weeks after the start of trading, and that's where we can see the cloud beginning right here with its nice flat bottom caused by the fact that in the first couple of years of trading, it traded fairly much in a trading range before it took off in 2017 and pretty much ran up on top of the Tenkan Sen the entire way up. After that, in 2018, it did relax a little bit at the first, and then mid-year, it came down and found some support at the top of the cloud, fell down below the Tenkan Sen, came down, fell underneath the cloud, and then consolidated here at the end of the year with its low in December. We can see the black line, which is the 200-period simple moving average, started printing in 2018. In 2019, there was a bit of consolidation, and then in 2020, we have a massive run-up. After a little bit of a low, it gets back up above the cloud. This is a good time to get in as the market goes up, staying above the Tenkan Sen, riding it all the way up and into 2021, and it did have a nice little peak here in February, and then it has relaxed at this point. We'll take a look at the daily here in just a moment, but first let's put in some support and resistance lines based upon Ichimoku here on the weekly chart. Market action came down, fell through the Tenkan Sen, found a little bit of support at the Kijun Sen, then came underneath it and is now in this current consolidation zone. We did have a flat red line, the Kijun Sen back here, and that is going to be our first line of support right above us. We did come up and touch that during this week of trading, and so getting above this line is going to be our first goal. Above this, we do have the flat line of the Tenkan Sen, and that's going to be our next line of resistance right above at 71.47. The top of the cloud is also going to be a nice point where we have resistance, so we're going to draw in a line there, and we can see if that comes in at around $69. So this gives us a three-stepping stone, a zone of resistance above us, where if price can get up through all three of these, then it should be free and clear to run to the upside. Coming in for support below us, we have this little flat line here of the Kijun Sen, and that's going to be our support directly underneath. We also have the bottom of the cloud, and that's going to bring us another line of support down here at 57.8. Here on the weekly, our lagging green line is still free and clear, although in its cone of possibility, it looks like it will be running into market action fairly quickly. Our future cloud is green, and it is starting to round off the top, even though it was getting thicker there for quite a while, but we are starting to see a little bit of a round off as market action has pulled back into this consolidation zone. Here on the daily, we can see market action comes into the year, riding the Tenkan Sen up quite a ways, fell through it a little bit, then had its major push up and its top before it came and fell underneath Tenkan Sen and the Kijun Sen, and then consolidated a little bit enough for the Tenkan Sen to cross below the Kijun Sen, and that created this bearish channel here as market action fell through the cloud, finding support at the 63 line, and then finding support again at the 63 line, and then a third time at the 63 line, and it looks like we might be coming down and finding support again at the 63 line. We're going to be looking and hoping that on a bullish perspective, we will find support at the 63 level and can start moving up. Support below is the 200-period simple moving average at around $61, and then we also have the low support line at 57.8. Our resistance above our first line is also where the bottom of the cloud is at. So being able to get above the 66 level and then into the cloud is going to be a nice goal to have. Right now, we do have a bullish channel that has happened with the blue line being above the red line just a little bit. They both are currently flat, showing that we have not had a new higher high or lower low, with the red line looking back 26 periods and the blue line looking back 9 periods. So it will take a new higher high or lower low to be able to see the lines start moving again, either up or down. As market action came up, it pulled the lagging green line up to just underneath market action here, but it was not able to get up above, so the market action here could have helped stall the current market action as our lagging green line, our memory line, our momentum line came up and got in this location, and it's currently falling down, and it's now inside old market action. Its first goal will be, of course, to get above the blue Tenkan-sen, and then to get above the resistance area of 66, and then, of course, to get above the red Kijun-sen. We did have a cloud Kumo twist here where we changed from a green cloud into a red cloud, which is merely the line A going below the line B, with the line A having a shorter calculation, and thus it moves just a little bit quicker than the line B, which looks back 52 periods and divides by 2 and has the highest high and lowest low average and this line. And we can see it's nice and flat. It comes in at where our top line was of resistance on our weekly at around $71.47. So that's going to be a big pressure point to be able to get above, to be able to see a bullish momentum for continuation of an upward trend. The cloud was getting thicker here for a little while, but with our current consolidation, our bottom line has gone flat, and we will be looking for the cloud to start thin if the market action can get up inside the cloud and cause it to start getting smaller. EMQQ is an emerging market internet and e-commerce ETF, and so being emerging markets, we're going to compare it to an emerging market ETF. In this case, we're going to use the iShares IEMG. We can see its chart here currently on stock charts. This is a daily chart, and it is currently moving up and rode the top of the cloud here for just a little bit before falling inside the cloud, and it's currently below the blue line and is still inside the cloud and above the red line. To compare market action, we're going to look at a ratio between the two stocks. We are going to put in EMQQ IEMG, and this will give us a ratio chart between these two ETFs. So right now, EMQQ is underperforming IEMG. As we can see, when we started having this little downfall in EMQQ, it also was underperforming IEMG at the same time. For emerging markets, internet and e-commerce to start outperforming emerging markets, we're going to see this ratio turn around a little bit, where market action needs to get up above the red line here, as well as coming up and challenging the bottom of the cloud. Moving up in towards the cloud will cause the blue line to move above the red line, and that will be another bullish sign that internet and e-commerce is starting to outperform the basic emerging markets. Our lagging green line is free and clear to the downside, and for this to become bullish, we're going to need to see this come up and challenge old market action and get above the blue Tenkan-sen. The 200-period simple moving average on this ratio was coming up. We found a little bit of support at it twice, and then came underneath, and then we found the resistance at it at the April, and now we're looking to come back and get back above it. We don't want this to start angling down. We want it to remain flat, and then for us to get up above it. The ratio future forecast does show we do have a red cloud, and it is getting thicker. We do have a flat line here at the top, so that's going to be a major resistance zone for this ratio for emerging markets, internet, and e-commerce to outperform emerging markets. We're going to need to get above this, and as soon as we get above this, then we will have a long-term bullish trend on emerging markets, internet, and e-commerce. This has been a deep market analysis of EMQQ, the Emerging Markets, Internet, and E-Commerce ETF. I'm William Grantham with IchimokuWeather.com. May your trades be true and your profits strong.